Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Uncle Frank is still dreaming about the ultimate white swan. Microsoft just became the most valuable company in the world, but not because they're doing better than Apple. It's because Wall Street attacked Apple, in my opinion. And I hate Bill Gates. I don't need the Windows guy forcing vaccinations on us. I don't need this freak show being the largest owner of farmland in the United States. Why? So he can get rid of farting cows? Force us to eat bugs? How many times did this weirdo say he had nothing to do with Jeffrey Epstein except a little fundraising? Come to find out, he went to the island on 37 separate occasions. That claim hasn't been substantiated yet, but you were on some of the flight logs, weren't you, Billy? Anyway, the trap shorts and Wall Street attacked Apple on the first day of trading for 2024 in the hopes of causing a sell-off in the Magnificent Seven, in my opinion, that would have meant a broader market sell-off, which is what they need. But Apple is still worth $2.87 trillion according to this table, and could easily get back at Wall Street by buying AMC, which it could do with its couch change. Let's be real. Overnight, Apple would be the largest theatrical chain on the planet. It would also become a top 10 distributor according to 2023's numbers. And what a great fit Apple Music and concert films would be. You want to win the streaming wars, Apple? Then control the theaters first. Then double your footprint as a distributor. Just take a look at that new logo Uncle Frank came up with on the right. I sent an email to Tim Cook's office. I figure, hey, you never know. It's worth a shot. People are getting sick of Apple issuing the same damn phone every time with just a few adjustments. Why not give the finger to Wall Street, Jeff Bezos at Amazon, and even Hollywood by buying AMC? Could you imagine how great a company AMC would be without Morgan Stanley running our board? Without Citi destroying our stock for Wall Street, and without the pervert CEO Adam Aron filling his pockets while selling our stock to short sellers for pennies on the dollar? I can dream. Now, this is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any securities or cryptocurrencies. Speaking only for myself, I was buying AMC all last week on dips because it was making new 52-week lows in an effort to improve my average cost. Hopefully, we can get a short covering event before May, and maybe even a new CEO that doesn't spend his time texting strangers nude images of himself involved in a sex act, getting embroiled in a blackmail scandal, or spending our money on a previously bankrupt gold mine just to pay off 5 lenders that were or are short sellers or put holders against AMC. Oh, you didn't know that? Really bad person, crystal ball, little bigums? Maybe you should read the Highcroft 8K from March of 2022 when we made that little investment, with all the DD you guys supposedly do. And I have a question for you financially illiterate ass pumps. When was the last time your CEO hero actually mentioned the apes in one of his tweets? What happened to all the clever hashtags, guys? Today we pounce, choke on that, checkmate, there's gold in them thar hills. You Adam Aron fanboys are either the biggest saps in the markets, or were you paid to mislead retail investors? Because if yes, you should disclose that. I guess we'll find out when the depositions finally happen. Gold set an all-time high in 2023. How's Highcroft doing, guys? That's called a breach of fiduciary duty, in my opinion. When you invest millions into a bankrupt gold mine, previously bankrupt gold mine, to bail out your friends when you have no precious metals experience at all, when you're over $5 billion in debt yourself, when was the last time Adam took a picture next to mining equipment over at Highcroft? No more tweets, NFTs, no more silver rounds with his mug on it? What's wrong, guys? Is it because Adam's investment with our money is down over 60% like our market cap? Anyway, here's a fun headline from CBR. Kingdom of the Planet of the Apes moves up release date, avoiding competition with anticipated film. A new release date has been given to the Kingdom of the Planet of the Apes, and it's sooner than fans were expecting. Previously, Disney had dated the film for a release on May 24th. On Friday, Variety reported that Kingdom of the Planet of the Apes has been shifted up by 2 weeks, now set to drop on May 10th. One thing I can say for sure, if Adam and his senior management team pay themselves millions in stock bonuses for 2023 while our stock is down and our market cap is down, almost 90%, we may all show up to this film just to peacefully protest. Guys, as I've told you many times before, you can support the company, you can love the stock, all while hating policies of senior management that destroy shareholder value, like selling our stock for pennies on the dollar while you have over $750 million in liquidity. We don't have to do it this way. We don't have to do it at this time. That makes you a shareholder activist, not a shill, as the morons on Twitter like to call everyone who doesn't support Adam Aron whoring out our company to Wall Street interests. So let's start out this year strong. Let's get to the theaters and have a big holiday weekend. I know the stock is down and it's a miserable feeling to watch all the corruption, but no matter what's ahead, it's always better to face the future with explosive top-line revenue. A headline from Screen Rant, and a movie you should go check out this weekend if you're near an AMC. Jason Statham's new action movie breaks huge Rotten Tomatoes audience score record. Go check it out. And here's a breaking headline from IndieWire from just hours ago. Mean Girls drives $100 million box office weekend, but it may be the last one until March. They just can't let us have a victory, can they? The Martin Luther King holiday, along with The Beekeeper, took us to $101 million. Hey, I say it's a good way to start out. As I've said on many videos before, it is not going to be some great news out of AMC that causes a short covering event. Look at our third quarter. That was the best third quarter of our entire 103-year history. That includes 2019 pre-pandemic. What happened? Next morning, Adam comes out and announces, I'm going to swap stock for debt, right? We've been going straight down ever since. It's not going to be some special dividend from AMC that frightens the predatory short hedge funds. That's impossible. Why? Morgan Stanley runs our board. Citi is our chief investment banker. They will telegraph any new dividend to Wall Street. In fact, it will be designed, just like the ape, its conversion, right, and the reverse split, it will be designed by Citi, a short seller of AMC, in our boardroom, designed by short sellers for short sellers. No, I think the only path will be a black or white swan, some unexpected event that adversely affects the leverage chains of our hedge fund enemies. In other words, these guys are leveraged 50, 60 to 1. If some unexpected event comes along, then, the mustard is off the hot dog. That's where the margin calls come from, just like Archegos and Credit Suisse. So I focus on potential black or white swan events. Here's one for this week from ABC News. A partial government shutdown could happen this week. From Bloomberg, White House tells agencies to prep for shutdown amid House chaos. Put it on the calendar because it could happen. And what about this one from the State of the Union? World Bank sounds alarm on grim future. The World Bank warns of a slowdown in global economic growth, projecting a drop to 2.4% in 2024 before a potential rise to 2.7% in 2025. Factors such as conflicts in Eastern Europe and the Middle East could impact energy prices, inflation, and economic growth. The bank emphasized the need for a significant change in course to avoid labeling the 2020s as a decade of wasted opportunity. In an annual report, the World Bank, which lends money to poorer countries for development projects, said it has slashed its forecast for global growth this year by nearly half to just 1.7% from its previous projection of 3%, the report noted. Quote, if that forecast proves accurate, it would be the third weakest annual expansion in 3 decades, behind only the deep recessions that resulted from the 2008 global financial crisis and the coronavirus pandemic in 2020. Now, this is a story that will not go away, and it's one thing to create a competing currency to dethrone the US dollar, but this is a far different matter from Cryptopolitan. BRICS' $28 billion bond sale shuns the US dollar. The new development bank, popularly known as the BRICS Bank, is making a bold move in the global financial markets. In a striking deviation from traditional practices, the BRICS nations are launching Maharaja bonds as a new series of bonds that are set to reshape the financial landscape. This initiative is not just another financial maneuver. It represents a significant shift in economic strategies, as these bonds will be purchasable in local currencies, deliberately bypassing the US dollar. This move underscores the BRICS nations' commitment to de-dollarization, challenging the long-standing dominance of the US dollar in global finance. Gotta keep an eye on this. And what do you guys think of this headline from the Motley Fool? This recession indicator hasn't been wrong in 58 years. Here's what it says happens next from the article. Although there's no such thing as a forecasting tool that can, with 100% accuracy, predict directional moves in the Dow, S&P, and NASDAQ, there are a couple of predictive indicators that have strongly correlated with movements in the 3 major stock indexes throughout history. One such indicator, which hasn't been wrong for the past 58 years, has a potentially ominous warning for investors. While there is no shortage of metrics investors are using to try to gain an edge on what might happen next with the stock market, it's the Fed Reserve Bank of New York's recession probability tool that appears to offer the biggest clue. The New York Fed takes into account the spread, i.e. difference in yield, between the 10-year Treasury bond and the 3-month Treasury bill to determine how likely it is that a U.S. recession will take shape within the next 12 months. Now, guys, I should add the government and the financial media like to define what a recession is, but I think we've already had one and may slip into another. Normally, the Treasury yield curve slopes up and to the right. In other words, bonds that mature a long time from now will sport higher yields than bills set to mature, in just a couple months. The longer your money is tied up in a security, the higher the yield should be. Trouble arises when the Treasury yield curve inverts. A yield curve inversion, where short-term T-bills have higher yields than longer-dated T-bonds, signals concern about the U.S. economic outlook. Although not every yield curve inversion is followed by a recession, every recession following World War II has been preceded by a yield curve inversion. Think of it as a necessary ingredient to a potential downturn in the U.S. economy. Just something to think about. So, Uncle Frank, are you afraid of a recession? Hell no. Some analysts use movie theaters to predict recessions. Check out this headline. Americans are flocking to movie theaters. Could it be a recession warning? During the last 8 recessions, box office sales grew 6-fold. That article was from April of last year. U.S. box office sales recovered to 2019 levels this past week, meaning that moviegoing has officially recovered from its pandemic slump. On the surface, the data looks like a sign that Americans are continuing to spend on entertainment services and flexing their wallets despite recession fears. But moviegoing is one of the cheapest forms of entertainment away from home. In the past, theaters have been where Americans went for entertainment when the economy shrank. During the last 8 recessions, Box office sales increased 6 times over. The 2020 COVID-19 induced recession was the outlier. Movie theaters had to be empty to stop the spread of the airborne disease. But don't worry, Adam Aron doubled his comp plan that year. Even in hard times, people don't stop doing things, according to Patrick Cochran, Vice President and Chief Communications Officer at the National Association of Theater Owners. They just look for cheaper options, and often that's going to the movies instead of concerts or other things. Now, guys, you know I can't promise anything, but I do have some interesting events for next week to keep an eye on. Remember, Uncle Frank's entire theory of a swan creating a short covering event imposed on the predatory short hedge funds is completely predicated on an event that turns the prime banks and brokers against their best customers, the very same hedge funds. A liquidity crisis, if you will, that prompts the primes to demand balancing the portfolios of the hedgies. A nice way to say margin calls. So let's get ready for next week together, starting with this headline from Yahoo Finance: retail sales and investment banks. What to watch this week? And notice, Yahoo Finance put up an interesting term: credit loss provisions. Keep that in the back of your mind as we review the recent performance of the big prime banks and brokers. From the article, after snapping a 9-week streak to start 2024, by the way, that's a streak I think killed the big shorts, stocks got back to their winning ways last week. As far as I'm concerned, that's good news for us. All 3 major indexes advanced during the first full trading week of the year, led by a 3% gain for the NASDAQ, while the S&P finished the week's trading less than 13 points, or about 0.3% away from a record high. To cap the week, Microsoft also overtook Apple as the world's most valuable company. We already covered that. In the week ahead, investors will look to keep the momentum going in a holiday-shortened week. With the U.S. markets closed Monday in observation of MLK Day, results from the financial sector and Wednesday's retail sales data should serve as the main calendar catalysts. Away from the earnings and economic calendar, Monday's Iowa caucuses will mark the official start of the 2024 U.S. presidential election. On the geopolitical front, rising tensions in the Red Sea, with the U.S. and its allies carrying out airstrikes on consecutive days in Yemen last week, are garnering increased attention from investors. The coming week's key earnings report are expected Tuesday morning, with investment banks Goldman Sachs and Morgan Stanley set to offer results after a challenging year for the deal-making business that features in their results. Okay? On Friday, major money center banks, including JP Morgan, Wells Fargo, Bank of America, and Citi, all reported fourth quarter and annual results, right? That's what we're going to talk about next. Well, Goldman Sachs reports Tuesday. I wonder if they're going to mention any of this on the earnings call. SEC fines Goldman Sachs $6 million over inaccurate, incomplete trading information. Goldman sent inaccurate data to SEC on 163 million trades. Bank admits to allegations in settlement with regulator. Blue sheet submissions were lacking for about a decade. This is the same Goldman that spoofs the shit out of AMC on a daily basis, had a huge put position against AMC, and was one of the members of the securities lending cartel Equilend. Should be an interesting earnings call, wouldn't you say? And Morgan Stanley also reports Tuesday. The guys that run our board of directors, they started laying off people back in June. Just 452 of Morgan Stanley's 3,000 layoffs are in New York. And from the fourth quarter, Morgan Stanley fined nearly $250 million in criminal block trading probe. The fine settles charges of multi-year fraud involving the disclosure of confidential information about block trades, also a member of Equilend. And what about our biggest bank? JP Morgan Chase profit falls after $2.9 billion fee from regional bank rescues. Did you guys know JP Morgan owns 100% of Highbridge Capital? Did you know Highbridge Capital had a huge put position against AMC? They recently sold it and made a fortune on this recent drop since Adam killed the rally the day after our greatest third quarter earnings call in our entire history, even beating 2019's pre-pandemic results. It's almost like they knew it was going to happen. Did you know Jeff Epstein got like a $15 or $17 million finder's fee when JP Morgan Chase bought Highbridge? Did you know Highbridge also managed money for Jeff Epstein? Did you know Highbridge was one of the 5 creditors at Hycroft Mining that got paid off when Adam invested in the bankrupt gold mine? Maybe you should hit that subscribe button so you're sure to know these things, because the idiots on Twitter certainly do not. Yeah, it was a zany year over at JP Morgan Chase in 2023. JP Morgan settles with Jeffrey Epstein victims for $290 million. JP Morgan pays $75 million to settle lawsuit over Jeffrey Epstein ties. And what about Ken Griffin's favorite prime bank and broker, Bank of America? Bad office loans mount at Bank of America, Wells Fargo. Big U.S. banks reported more charge-offs for struggling debt. U.S. office values have fallen on higher vacancies and rates. From Bloomberg yesterday, Bank of America, Wells Fargo, write off more office loans in Q4. And another Bank of America shares fall after company reports lower fourth quarter profit, hit by regulatory charge. Major U.S. lenders, including B of A and Wells Fargo, wrote off more of their commercial property loans as remote work and higher interest rates pummel the valuations of U.S. offices. Net charge-offs at Bank of America and Wells Fargo rose during the fourth quarter, partly due to office loans, according to earnings releases Friday. JP Morgan Chase set aside more reserves because of a deteriorating outlook on commercial property valuations, the bank reported Friday. Banks have been grappling with fallout from climbing office vacancies in the aftermath of the pandemic and financing costs that have soared as the Fed Reserve raised interest rates. That's caused a 35% decline in office prices from a peak in early 2022, according to real estate analytics firm Green Street. The challenges won't likely let up soon. Bank of America has about $7.6 billion of office loans maturing in 2024 and $3.1 billion in 2025, according to a presentation. While about 75% of its office loans are backed by higher quality buildings, its percentage of non-performing office loans ticked up during the fourth quarter. B of A was also a put holder against AMC Entertainment. And let's not forget AMC's chief investment banker, a short seller of AMC, or at least a put holder now, the author of The Ape, its conversion, and the infamous reverse split we never needed to do, but Wall Street badly needed us to do. Citi, to cut 20,000 jobs, posts $1.8 billion loss in disappointing quarter. May you become the biggest bank failure in U.S. history, Citi. And a headline from MarketWatch. Wells Fargo sets aside a lot more money for potential loan losses. Stock falls. Wells Fargo and Company stock dropped Friday after the California-based bank reported a big jump in fourth quarter credit loss provisions. There's those words again. Expect that to keep coming up, guys. Now, to add to the flock of swans for this January, don't forget, we have the long-awaited Evergrande liquidation hearing this month. Lots of banks all over the world might see those losses move from the unrealized column over to the realized column real quick. And here's a nice highlight for you. It's 3 p.m. here in the suburbs of Chicago, and the 4:50 p.m. showing of The Beekeeper is sold out. Let's get out there today and tomorrow and support our business, people. Moving over to the Reddit sentiment and mention tracker, I think it's important to note that AMC came in fifth after an absolutely horrible week for the stock with 149 mentions, just behind GameStop. They're behind Bitcoin and Ethereum and then Vanguard. So, the top three are two cryptocurrencies and a giant ETF. Then come GameStop and AMC, more than any other stock. XRP also showed up in the ninth position. So, the three things I'm most concerned about are in the top 10 of being talked about in social media. And hey, to all you YouTubers and Twitter personalities that push the ape conversion and reverse stock split narrative, especially the one that said the CUSIP change was going to cause a short squeeze, I wanted to close with one of Adam's properties. This is his 7,000 square foot mansion on 25 acres. Adam's going to be so effing rich, right? Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.